Bangko Sentral ng Pilipinas is the first Southeast Asian central bank to cut rates since Trump's Liberation Day tariff announcement. Elsewhere, central banks in India and New Zealand reduced their own last Wednesday. With us now for more, live from the Bangko Sentral in Manila is Governor Eli Remolona. Good to see you again, Eli. Thank you so much for joining us.
Good to see you, Kathy.
You know, 2 months just whizzed by from the last time we talked in February when you kept rates steady, and this time you cut by 25 basis points. Could you give us some color? How did the board vote? Was it a unanimous 25 or a near split between 25 and 50 or a near split between 25 and steady?
I wouldn't say unanimous. I'd say there was a consensus to reduce the policy rate.
When you say consensus, would that be maybe 3/4 of the board? That it wasn't that difficult to decide on?
It wasn't that difficult. The policy rate cut itself, that was an easy one. The more tricky one was what to do in the next few meetings. How many more cuts this year? That was the trickier question.
So it's trickier deciding what to do next. So what was the mood like just coming into that meeting yesterday morning? Because just hours after waking up to Trump, walking back on most of his tariff threats, but for China. So that was the kind of scenario that you had in trying to figure out what to do next.
Yes, there was some apprehension, of course. We're looking at slower growth, which is kind of a first in the last few years. And then we're looking at lower inflation, which is kind of good news. It gives us more degrees of freedom. So there was less hesitation in cutting the policy rate yesterday. Most of the discussion was actually about how many more cuts in the next few meetings. Do we cut every meeting or do we cut every other meeting? That was more the subject of the discussion.
Right, and whether it was because of faster inflation or slowing growth. I know that you mentioned that phrase, more degrees of freedom, after the March inflation result came out. So did Trump's 90-day pause matter in a big way in your decision-making this time around?
I wouldn't say in a big way. It matters, but uncertainty didn't clear up a lot of the uncertainty. So when the reciprocal tariffs were announced, we got numbers that we could feed into our analysis. And then 90-day suspension meant maybe those numbers are not the right numbers. So it's some uncertainty came back. So that's why it was so tricky.
Right. I know that you've mentioned in yesterday's media briefing the computer models, and I believe there were three computer models that you fed information to arrive at a data-driven answer. But they haven't really caught up with everything else that was going on. So there is this certain uncertainty on this challenging economic environment. So how much of the monetary policy decision-making now is part guesstimate? And what part of it is data-driven? Would you say 50-50? 60-40, 70-30 in favor of guesswork?
My guess is 60-40.
All right.
60% based on numbers and then 40% based on judgment, but informed judgment, I would say.
And that's pretty important, the informed judgment, because what we're seeing right now, and I wanted to ask whether this was and is what the Monetary Board is seeing, a certain decoupling between the Bangko Sentral and the Federal Reserve, given the inflationary impact of the tariffs and what it could do to the U.S. economy, slow growth and cause faster inflation.
Yes, slower growth, higher inflation. Actually, we're looking at lower inflation at the moment, unlike much of the world. So we're in a somewhat different situation, I would say, than much of the world.
True, because that will be lower inflation for us, but perhaps faster inflation for the U.S. So they're starting to decouple from the rest of the world. Is that correct? The U.S. economy is starting to decouple.
That's correct. There's going to be less trade between the U.S. and the rest of the world. And there will be less trade in general. That means less comparative advantage, which means lower growth.
And I guess a lot more trade friction, trade war between the U.S. and China. What would be
Yes.
the impact of a trade war then between the two giants, the U.S. and China, over smaller countries like the Philippines? Would the risk be bigger on growth, which slows, or inflation, which risks turning hotter or faster?
I think the risk will be bigger on growth. When two giants confront each other, the rest of us are affected. So it's a question of to what extent we're affected and how big are the effects. But we're part of the world, so when the world is affected, we're also affected.
And when that happens, we don't really like the R word, do we? Recession. I mean, the U.S. faces the threat of a recession, thus the multiple Fed rate cuts that's expected by the market, 2 to 3 forecast cuts. How
Yeah,
mindful
yeah.
is the Bangko Sentral of keeping that interest rate differential to 100 basis points that now you enjoy between the Fed funds rate and the key policy rate at the Bangko Sentral?
The differential between the policy rates is a significant factor, but it's not a decisive factor. There are other things in play. For example, the market these days look at not just the policy rate differentials, but also the degree to which we are dovish compared to the degree to which the Fed is dovish. At the moment, I think the Fed is somewhat more dovish than we are. So those things matter, and then of course there's other things like global tensions, which tend to strengthen the dollar because the dollar has been the safe haven currency. Maybe less so today, but there's a lot of other factors that affect the exchange rate.
What about the peso, though? Now that you mentioned the exchange rate, how much of a factor would that be in changing the nuance in your dovishness?
Ah, uh, what we find is a large depreciation of the peso, even when it's a strong dollar story. A large depreciation of the peso tends to lead to some inflation in the Philippines because a lot of our imports are invoiced in dollars. Then depreciation of the peso means they're more expensive in peso terms, and that's inflationary.
Well, the peso has traded between 56 and 57 to the dollar of late. At what dollar peso exchange rate levels is the Bangko Sentral buying or selling dollars as these global uncertainties prevail?
We don't look at the level itself. We look at how large the swings are, and if it. In fact, we don't look at day-to-day volatility. We don't care that much. We care about the peso when it depreciates sharply over a period of time, and then that becomes inflationary. By the
And
way, when the peso appreciates, there's no disinflation that follows. So it's a one-sided thing. It's an asymmetric thing.
that's true, but I'm starting to think about the overseas Filipino workers, so it's going to take
Yes,
a
yes.
lot more for them to remit to give their families the kind of money that they need on a monthly basis.
That's right. That's right. That's right. We do worry about that.
Is the GDP at 6% and above for all of 2025 still intact?
We're hoping it will still be intact, but now there's risk. There's risk that we will see lower growth than before.
So if that's the case, would maybe 5%, 5.5% be the lower end of the band then?
I'd say more like 5.2, or, but not less than that. We're still hoping for 6.
So what are the chances that we could still hope and reach towards 6%?
We'll look at the data some more, but we can't say at this point. There's too much uncertainty, Kathy, to be more definite about the growth rate.
That's true. I just have one final question. Is there any existing blackout period before the BSP rate setting meeting? And if yes, how many days before the BSP monetary policy setting meeting?
We have a blackout period of 7 days. So I can't talk to you 7 days before the.
I know. That's
before
why I
the
wanted to
policy
ask.
meeting.
That's why I appreciate you giving us all this information before those 7 days come up on the countdown. Thank you as always. Central
you,
Bank Governor Eli Remolona joining us live from the Bangko Sentral.